So I'll delete this indicator. This is our Bollinger Bands, one of the indicators we talked about the last time. And I'll just delete them and I'll show you how you can add them on your trading view. So I believe everybody can see my screen. Leader Team Topper, please can you confirm to me that you can see my screen?
Yeah, you can see your screen very clear.
Oh, okay. So you can see my mouse. So this is SUI USDT, and it's a virtual contract actually, but I'll just try and use it's still the same thing, but let me choose a normal spot pair. So this is SUI, and we can see that this pair, from the way we do our analysis, if you have been following our technical classes, you know, when we are in the market, we do top-down analysis. And the first thing we need to do is to see the overall direction of the market. And we come to like a higher time frame. Now, my higher time frame at the moment is currently the daily time frame. And we can clearly see that this trend, this uptrend, you can clearly see. So just if you draw your trend line, you can see that this trend is really maintaining its support level. You can also see that the resistance level is just drawing like a channel. There's this channel. So it's respecting this trend in as much as this asset doesn't break below here. You can see it has been supporting all the way. Consider as its multiple touches on this trend line. And it's trading within this range. This doesn't have to be perfect. Very easy. So for me to add my indicators, I just have to come to the upper side here, right? And I'll click on it. And here you will see the indicators that are already favorited. They are here. You can favorite any indicators of your choice. So I'll just type here BB, which is standing for, I already have it here highlighted. You can either type Bollinger Bands or you just write BB. The trading view already know that you are speaking about Bollinger Bands, so it will come out up here. So I'll just click on it. And here you go, it's already plotted on my chart. So I'll take out all the drawings on my screen. And we can see clearly here that it has been applied to my trade. So we'll come to a very lower time frame to have a quick entry. We already know, okay, after all the analysis, so we want to always use our indicators for entries, right? And the last time we defined our Bollinger Band and we told us what they are standing for. So Bollinger Bands is basically an indicator that's come up with three lines, right, plotted on our chart. And this red line that is plotted up here is a moving average, and the down one also is a moving average. But this middle one that is in blue is a simple moving average, right? It's a simple moving average. And the up moving average and the down one are normally the 20 moving average, but they are in two standard deviations, right? So there are two standard deviations in moving average. And they are highlighting the close of, so the up band is highlighting the close of each candle of this period here, okay? of the last 20 period, the up one, and the down one also is identifying for the close of all the 20 last period of our moving average. And if you see here, around here, you see it is written BB20 because this Bollinger Bands is marking out 20 standard deviation. Okay, so we'll come to a lower time frame like the 30 minutes or the 15 minutes, depending on what we prefer. Okay. So when we come to our 30 minutes here, for you to get a confirmed signal of when you want to trade, you just have to wait for price to hit your lower band and you take a buy. So for example, if I was to enter a buy here, I would wait for price to come to this lower bound from here, and I'll take a buy. So I have to wait for price to come to around this area. So every time you want to take a trade, you have to wait for price to come to the lower bound, and then you take your buy from here, and then you come out when the price hits the upper bound. And if you've taken this trade here, just from here, and then if you measure from here up to the upper bound, you can see that's a whopping 3.32%. Okay. Now, if I was to enter another trade with this Bollinger Band, we can see that this price is currently trading at around our middle simple moving average. We just have to wait for price to come below here. So if we were to be waiting for price right now, this is the area we should have been waiting for price to come for you to take it back. And it's a pure setup. So you just want to take either your triangle, the right angle tool, and you mark this area out. So as price just touch on your on this down average, you take your bar. So the last time I said I will show you how you can set this your Bollinger Bands. You just have to click on this band, and here you go. This is the settings of the band, and you can see the length is 20, which is the upper bounds that are on a moving average, is 2 standard deviation, and you can see that. But if you want to expand this band here, you can actually turn it to even maybe a 3 standard deviation. What that does is it expands our upper and the lower bounds, which makes the space on our Bollinger Band even bigger. So you can type in here, you cancel the 2 standard deviation, you put 3. So if I was to click on this, you see that the bands now is wider. So it's covering even more average. So you can never miss on this. So the 3 standard deviation, but the default settings is always on 2 standard deviation. So you can even expand on your standard deviation to up to like 3. 3 is really nice, but I think also 2 is a very nice one, which is the default settings. So do anybody have question as regards to the Bollinger Bands and how you can use it to take your trade? Do anybody have any question? Before we move to the next, if there is no question as regards to the Bollinger Bands, we'll move to the next indicator. Is if you're having any question as regards to the Bollinger Band, just type in the chat box, and then I'll answer the question before we move to the next indicator. So the next indicator that we have on our list is our RSI. So I'll just I'll delete this and I'll add my other indicator. I'll add my RSI. So as you can see, we have our RSI here, and RSI is an indicator that indicates the strength on the strength of an assets, and it also indicates for us our overbought and our oversold levels in the market. So which is ranging from 0 to 100. And in fact, from here, once our assets that we are trading is below or around 30, which is here, is believed to be an oversold. It's a good entry whenever you see your RSI ranging at around 30 or below. It's an overbought, oversold, sorry. And it's a good signal that you can buy. And when it's above 70 or close to 70, is an oversold. And for us who are trading the spot market, it's always advisable that we take our signals when market is around the oversold level. In fact, if you see from this area, market was oversold. Okay, market was very oversold, and if you measure, if you come down here, you will see that our RSI was indicating at around 30.17. So it was around 30.17, and the market was really oversold. So this is our RSI 14. You can change it, you can change the settings, but the RSI setting, the settings already here is perfect because at around 30 for our oversold is perfect. But you can also change the settings and move it to around maybe 28 or so for traders who are really very strict. They use even something below 30. The radical traders, but for 30 for the oversold is perfect. So you take your entry when market is around oversold, and the best way to do that is you wait for markets to be really oversold, as like for example this area here. So you wait for it to cross 30. When you see that it has crossed this line, then you will still have to wait for a confirmation. And a confirmation will be when market has been oversold, right? It has been oversold, but then it stops to be oversold and start to move back to be so it has to cross this line back. So if you were to take a trade and you see that the market is dropping and is dropping to your oversold area at around 30, you want to wait to see how the market reacts. So you want to wait for market to stop being oversold before you can take an entry. That's your confirmation to entry. So for example, what I'm saying is, for example, I take my trend line, I take my arrow line, and I see that this market here is being oversold. Okay, what I want to do now is that I wait. I don't just take the trade. I want to make sure this market is no longer oversold. So my entry will be at around here. So the market has to stop being oversold before I take my entry. So you want to wait because A market that is oversold can continue to be oversold. It can continue and it goes down. Okay. So the indicators obviously is not enough. That's why we refer to them as confluences for entry. So we are using them as entry. You don't just consider just the indicators for entry. You want to also look into other factors as well. You want to at least know the trend direction from all the other things that we taught you, from just even analyzing your time frame, doing your top-down analysis from your higher time frame to the lower time frame before your entry level. So now, once you are at your entry setup, which is your entry time frame, which could be either 15 minutes or 30 minutes, and some other people's lower time frame might be 1 hour, and some other ones can be 5 minutes. So you want to wait for the market to be no longer oversold, but heading to being bought. So which means it's no longer oversold. Now it's going to being bought in the market. So heading over to be overbought again. So as regards to RSI, so for you to add your RSI, you just come to the indicators and then you come here. Your overbought level is 70 and your oversold area is around 30. So anything below it is a good entry for you. Just wait that the market, these lines here, stop being oversold and moves back a little bit from your oversold level to now being bought. Then you take your entry. So is there any question as regards to RSI? Is there any question as regards to the RSI? Does anybody have any question? So it's basically the same thing, it's just that on our and you can see that on the settings, once you click on it, you have your RSI, and obviously we also have the deviations on our RSI, which is obviously the two standards. These two standard deviation is being plotted on our RSI. So the upper level is our 70 and the lower level is our 30 level. So you can also switch and change it to 3 standard deviations and it widens the level. So now our standard deviation is now from our 80 level. If it's on, it's now 80 to around our 40 level, more of, no, the 30 and the 80 level. So is there any question? All right, if there's no question, we'll move to the next indicator, which is our MACD. Let me take this off. Okay. So these are MACD. So as you know, our MACD is formed with our normal moving average. So we have our moving average, which is plotted on MACD. This is not the normal MACD that we use with the histogram. No, a bit 300. No. Just a moment, huh? Bring up diverge of it. Okay, I got it. It's among my favorite. Okay. Now I have it. So for the moving average, you want to search for your moving average, and it has to be moving average convergence divergence. So I already have it favorited here. So as you can see, we have moving average with the normal two moving averages that is plotted within it, which is the 12 and the 26 moving average. So our normal 16 moving average and our normal 26 moving average. So, and we have our histogram, which is printing our volume up and the volume down. And the best way to have your entry using your MACD is when you have your crossover. And the crossover is best defined when our blue average crosses above the yellow line. So you have a trend and you want to wait for price to stop to move to the downside and then have the crossovers before you can take your entry. So for example, the best example would be when you have your crossovers like this. So when you have your crossovers like this, like we know the smaller average is the blue line, which the yellow line, which is the golden one here, the golden line here, is the bigger average. And whenever the smaller average crosses above the bigger one, that is when we have our golden cross, and it's a good signal for us to take our entry. And in fact, when market is going bearish, you will see that the two averages will be diverging from each other. So there will be let's just come to the current price, and you can see that there's a cross here now because the market is moving down. There was a crossover here that printed this up move, and we had our histogram, which is more or less like our volume, printing more volume because there were more liquidity being put in the market. And in fact, if you look from here, before there was this big move around here, there is like a block here that still has to be filled. So as soon as market gets to this level here, there will be a pushback. And I can promise you before market will come here, we have our fair value gap around here, and we have a cross already. Before this histogram should print back down, we will have another cross, and that should be a signal for us to have our golden cross. As soon as we have a cross, just something like this, it's the best time for you to enter, and you already see the market will start to convert, will start to diverge back upward. So a good entry will be from here. So once you do your analysis and you know that you have your structure here, you have a clear structure from here. So the entry confirmation is when you see your crossover from here. So now we see the market is pulling back to our entry level here. So a confirmation for an entry for you when you are using your MACD is for you to use it as a confirmation tool for your entry. You don't just go ahead and use just your indicators for entry, but you combine it with some other factors as well. So like your MACD, it will signal for you that is the best entry that you can get. Once you get the crossover, it's a great signal for you to buy when you are trading the spot market. So if you want to use single-handedly, it's fine, but I'll always advise you that you just have a clear trend and you have your setup. Here we have our other block. So our 30 minutes of other block on SUI right here is over here. And we have our breakout structure around here. And market will come to close this liquidity here. In fact, we see that there is still liquidity hanging around here. Okay. The next block that is still currently, there's a block here, but it has been mitigated. So the next valid block that we have is still currently around here. So and this is how you use your MACD for entry. In fact, you can see whenever there is a cross, the market always go bullish. Whenever there is a cross, you just have to wait for the blue line to cross the golden line, and it's a good entry for you. So you can see here, whenever there is a cross, there is always, so the valid cross happened around here. So we had a golden cross around here again, and so on and so forth. So you just have to wait for your smaller average to cross the bigger average. And it's also a signal for you to know that the market you can use it to identify your resistance and your support level, and also when to enter your trades. So like you can see, whenever there's a cross, when the blue crosses the gold signal, it's what we call a golden cross, and it's signaling for us an entry for our trade. So we'll be taking our questions now. We'll be taking our question. We cover the three signals, the three indicators for tonight. So is there any question, please? If there's any question, just drop that in the chat box and let's know. If you don't understand what we have been talking about and you want us to brief again on it, drop 2 in the chat box, or you just unmute and let us know what's your question. So the chat is open up for questions, please. So is there a question or you understand? If you understand what we've said, type 1 in the chat box. But if you have any question or you don't understand, type 2 in the chat box, please. If there is no question, I will be believing that everybody here understood what we just said about the 3 indicators. And the 3 indicators that we just showed us how to use is the Bollinger Bands, our RSI, and our MACD. Okay, 2. This person say he doesn't understand. Who is this person? Let me see. We have Titus who said he doesn't understand. Please, Jesus, can you unmute and tell us what you don't understand or which of the indicators you don't understand? Do we have any other person who doesn't understand? Please, if you don't understand, just type 2 in the chat box or probably type a message or you unmute and tell us what you don't understand. You can unmute, please. So, do everybody here understand what we have explained? So we for everybody here, like you all know, we do have our classes every day from Monday to Saturday at around 8:30 p.m. Nigerian time. Don't miss any of our classes. Do we have any of our leader here who is hosting the class for tomorrow? The guy has left. Oh, that's sad. All right, I'm assuming everybody here understood what we said. So please, if you understood what if you understood the 3 indicators, just drop 1 in the chat box. Let me know that we understood and we did cover everything. Okay. Usana said they understood. Okay, that's nice. We are like 18 of us or 17 people on the call. Does that mean the other people doesn't understand? Please, if you don't understand, just type 2, please. Don't be shy. I can still really go through it. Okay, 2. Okay, 2 gifts. Okay, please. Which of the indicators you don't understand, or is it everything?
Good evening, sir. I understand I came in a bit late. I understand this RSI, how RSI work.
Okay.
Is this gold and cross line of the blue and the gold to know how to enter the market?
Okay.
Is this chart analysis for sport or for futures?
No, this is for sports. So basically, I'll just stay with your mic open, so the class can be interactive. So you can see our MACD here. So it's formed with 2 moving averages, right? Which are our moving averages depending on the period. So when we say the moving average period, so it's a simple average that calculates the last previous candles depending on the period. When we say the period, maybe if it's a 20 moving average, so it calculates the last 20 candles. Okay?
Okay.
In our case here, we have 2 moving averages that is plotted within our histograms, which looks like our volume. So our volume in the market signifies to us when there is a lot of buyers in the market, right, that they are pushing the market to the upside, which is represented in this histogram, in the green histogram. Yeah. So you know that there is volume in the markets, like liquidity money, people are buying. Okay, the buyers, yeah, they are present. And we have our histogram also, which is identifying red, which is identifying the selling pressure in the market. Okay. So our moving averages, 2 moving averages that are here. There is one which is the bigger one, which is the golden one. And we have the moving average, which is the smaller moving average. So with the smaller average of around 12, okay, the 12 period. So whenever the blue line crosses the golden line, we call it a golden cross. Why do we call it a golden cross? Which is identifying that for us that the pressure, the buying pressure in the market now is high. So whenever it crosses, it's identifying a big momentum in the market, right? Now the buyers now they are pushing, that they want commanding the market. So it's a bullish momentum for us. So whenever there is a cross, it's a good sign for you to buy. So whenever you see that the blue is about to cross or it crosses, you can take a buy. Okay, but
You can take a buy.
yeah, you take a buy from the cross, and then you wait for it to whenever it starts to now diverge. So when you hit your target in the market, you just go out. You can target maybe a 2% to a 3%, depending on the time frame you're at. So here we are like on a 30-minute time frame. So you can, if you are in a buy position that you want to really close fast, you can just take a buy and target maybe from 1 to 2%, okay, of your trade. So whenever there is a cross, in fact, you see, I just outlined this space here, one of the golden cross, and there's also a golden cross here. You see, whenever the blue line crosses the gold one, there is also this our histogram here, which is identifying a bullish trend. Okay, whenever there is a cross,
Which is
a bullish trend. Whenever there is a cross, there's a bullish trend, and you can see at least this will print nothing less than 2 to 3% in the market. Okay, so now it's the blue line, the golden line now has crossed the blue line, and you can see that the market now is going bearish. So it's not a good indicator for you. You just want to wait for it to go bearish, and when it stops to being bearish, and then the two moving average will diverge from each other. They will start to widen. So when they cross each other, when we have the golden cross and you see that the blue line crosses the golden one, that's a good sign for you to buy. So do you understand now? Hello? Can you hear me?
Yes, I can hear you, please. I can hear you.
So do you understand now?
Yes, thank you. I understand that by now the gold cross and the between
Okay.
the blue and the gold. Thank you.
Okay, you're welcome, you're welcome. So
So
for
it's
the
within any of the time frame, right?
no, you see, whenever we want to do our analysis, we said we do, if you do follow our, I don't know if you follow our previous classes. So normally what we teach you here is how you can do your normal analysis. So there are other factors that you have to factor in before you can take those entry. You are using those indicators as like confluences, like confirmations for you to take your trade. Okay, we are just teaching you other alternatives for you to take trade using your indicators, like fast trade. Okay, but if you want to do a proper analysis, you want to make sure you do your analysis following the market structure. So doing your top-down analysis using a higher time frame to a lower time frame. So your higher time frame might be from a daily time frame to the hourly, like in 1 hour. Then your entry time frame might be 30 minutes, the lower time frame, okay, on 15 minutes, okay. And you can see up here, if you follow my mouse, I have those time frames that I use personally, from my daily to 4 hours to 1 hour to 30 minutes, 15 minutes, and 5 minutes. Okay. So you firstly want to identify the trend of the market, if it's bullish or bearish. So in our case that we're trading the spot market, we want to always trade when market is going bullish. Okay. So you want to buy if you are not investing, but we are trading. So you want to always make sure you are in a bullish momentum, you are in a bullish trend to take a trade. Okay. Doing your analysis, marking out to see if you are in a uptrend or you are in a downtrend or you are in a ranging market. So just do well to watch our previous videos and make sure you follow up in our upcoming classes. We'll still be covering most of the topics that we covered before, so you have more clarity on it.
All right, thank you very much.
You are welcome. So does any other person ask a question? So if there is no other person who has a question, I'll call on leader Temi Tokwe. Can you hear me? Hello. Not sure Leader Ndoko is here. Leader George, are you available? All right, no problem. So as you all know, we have our classes.
Yeah, now just wound up now.
Yeah, okay. So as you all know, we have our classes at around 8:30 every day. So don't miss any of our classes. Tomorrow be here at the same time, 8:30, and join very early. I also invite other people to join our classes and come and learn how you can make money using the RoyalQ bot. So I'm glad that everybody joined this evening, and I'm glad that you also understand what we talked about this evening. So good night, everybody. You can unmute and you can say goodbye to everybody. So good night, everybody.
Good night, everybody.
Good night.
Good night.